Apple just hit $3 trillion in market cap valuation. This is a historic, amazing thing that has happened. And I want to give you some context about what $1 trillion looks like. $1 trillion laid out the same way would cover approximately 1,000 square miles larger than the state of Rhode Island and Delaware combined. A stack of $1 billion would be 67.9 miles high. $1 trillion bills would reach 67,866 miles into space. And imagine Apple has that times 3. Now, they don't actually have that money. That's just the market cap valuation, which is different from the actual cash they have on hand. But goodness, it's a lot of money. I wanted to talk about today about if it's sustainable. And ultimately, my conclusion is I think it is sustainable, and I think it's probably going to go higher for a lot of reasons that I'm going to discuss. I'm not an Apple shareholder. Unfortunately, I sold my Apple a couple months ago because I didn't understand it too much. I really didn't get how much bigger it could get, and I had other stocks that I want to put my money into that I thought would be better bets. But apparently, Apple is the best bet in the world because Apple is the market, and that's essentially what I want to talk about today. So I want to give a couple of numbers real quick on some of their revenue numbers in 2021, and then we're going to talk a little bit more about why I think it's sustainable and why I think it can't crash, because if it does crash, the market would crash, and I don't know if the market is going to crash. So iPhone, $38.9 billion in 2021 Q4, which was an increase from $26.4 billion the year before Q4. Mac, Q4 2021, the most updated numbers, $9.2 billion, up from $9 billion in 2020. Services, this is all the music and the fitness stuff. Apple made about $8.8 billion Q4. Wearables, homes, accessories, Apple Watch, AirPods, the HomePod Mini, another $8.8 billion in Q4 2021. They made $20.7 billion in Europe, $36 billion in America, $14.5 billion in Greater China, $5.9 billion in Japan, and $5.1 billion in the rest of the Asia Pacific. Billions and billions of dollars off these iPhones, these Macs, these iPads, these Apple Watches, these services. Apple has become one of the most transformative companies in the world. It has become a namesake. It has become something that is likely not going to go away for a long time, because this device is probably not going away for a long time, which is why I think it deserves to be valued at $3 trillion. Now, ultimately, I want to say it's overvalued, because I want to say a company shouldn't be worth $3 trillion, given the sort of stagnation we've seen with Apple in terms of their lack of innovation, because over the past couple of years, they haven't really innovated outside of the AirPods and maybe the Apple Watch. But it's hard for me to win that argument. As a person who did debate in high school, it's really hard for me to win that argument, because you look at all the companies that exist. Market valuations are just perceptions that people have about the dominant players in the market. That's really all it is. Yes, you can get technical into the numbers, but why is Tesla valued at $1 trillion? It's because we don't think there can be another electric car company that can ever beat Tesla, which is why the winner takes all. Tesla's going to take all. It's very simple, actually, right? It's like, the people who focus on value investing and are so this is absurd, this is grossly overvalued, it doesn't make sense with the unit economics. It's like, you can't use those fundamental approaches to evaluate certain stocks like these, because you're not evaluating on even hype. You're just evaluating it on the potential of it becoming the one and only thing, the true monopoly in a space in which there aren't other competitors. And when you evaluate something like that, going 20, 30 years into the future, it has a much bigger valuation. And you just have to give it that valuation, because that's what people are going to be willing to pay for the stock. In the context of Apple, I think what Apple has done has been pretty strategic, which is they've integrated their devices, their core business, into every aspect of our life. And it's undeniable. It is really undeniable. Even if you use Android or stuff like that, you are going to be interacting with an iPhone or some type of Apple device in some capacity. And when a company has integrated their devices and their services within the mainstream of the entire global competitive markets, you start to recognize that they have a foothold over communication. They have a foothold over every single digital application that becomes big ever. It has to go through the App Store, and then Apple takes 30% of that. And then there's advertising dollars that are built on that App Store in order for you to get people to download your app. Any piece of software you want to get out into the world has to go through Apple. And you talk about $3 trillion, it's every single piece of software that you want to get out into the world has to go through this one company. If you want to get your software to adapt to hardware, you got to adapt it to Google and Android, and you got to adapt it to Apple, which means people are going to you have to adapt it, which means if you're going to keep adapting your software to Apple, people are going to keep buying the iPhone. And if your software is always continuously in line with the iPhone, that means there's this symbiotic relationship between more people purchasing this phone and you creating software for the phone, and it compounds, and there's a massive network effect, and it's hard to deny the value that has in mainstream life. If you are not using Instagram and WhatsApp and Facebook and these services to get your stuff out there, you're likely not building an audience. And, in this attention economy, everyone's trying to build an audience. And if you, aren't organically posting those platforms, if you have paid media, where else are you going to get a cheaper return on your money for paid media outside of Facebook and Instagram? It's like that company in and of itself has become such a foothold in the digital advertising industry that even if you hate some of its practices, you're not going to stop using it. And that's the same thing with Apple. So you might not like the stock, but the stock's going to be valued at $1 trillion, which was Facebook is at, because of the hold that they have on the industry. And I think the same thing is for Apple. Like, if you're not going to use the iPhone, what are you going to use? There's really only Android, right? And if you don't like Android because all your devices, all your software, all your applications are integrated with Apple, then you're not going to use Android, which means you're going to continue continuously using Apple. You're going to get an Apple Watch, iPad, Mac, the little Apple Pen that's ridiculously overpriced. Like, you're going to keep buying all these types of things, and Apple has all the purchasing power and leveraging power to be able to charge you for all these things, because at the end of the day, you've got to use the thing that works and the thing that's best in class, and there's not really that much of an alternative. So from the context of market valuations, when there's not an alternative, markets and people who invest in stocks have to decide where they're going to put their money to get a return. And when you don't see an alternative to Apple, when you see Apple ultimately having such a foothold in the industry to the point where no one can replace them, the question becomes, where else are you going to put your money? And I think that's what's driven the valuation of Apple. It's like so many fund managers, so many institutions that recognize that holding Apple, and they've said this publicly, is like holding cash, right? Because literally you can always trust that Apple's going to be here. It's kind of like Google. And because it's never going to go away, then it's going to just stay there. Even if it doesn't grow, it's not going anywhere. And if it's not going anywhere, then that means your money is safe, right? So you can sort of trade Apple almost as if you're like putting money in a bank, taking money out of a bank. And if it goes up, great, you've made some money on your investment, which is better than putting it in a bank because it wasn't going to do anything there. And if it goes down, it's like, it's going to come back, right? Because it's Apple. So it's sort of my conclusion here that Apple's valued at $3 trillion. And there's two things that are important to recognize. The car is coming. And when the car comes, it's going to be pretty big. I think it's 7-8 years from now. And to me, it's like, does Apple reach 4 trillion 7 years from now? That would be a little insane if they don't even have the car by then. But if the revenue numbers and the growth justifies it, and there is no other alternative, which is my whole point, I could see it going that high. Like, why? Like, what would be stopping it at that point, right? So the car is in sights. I think the car is going to be a big deal. I did a whole video on the car actually a couple months ago in November. I'll link that in the description where I go more in depth in the car. But the car could be a huge catalyst. Number two is, if Apple is the market and people treat it like cash, then there's no way it could go down, in my opinion. Like, and again, this is not financial advice. This is just my analysis, my hypothesis on it. But if the market crashes, Apple crashes. If Apple crashes, the market crashes. Apple's like, I think it was like I saw some absurd number. I don't want to say the percentage, but an absurd number of the S&P 500 is dictated by the NASDAQ is dictated by Apple's growth or decline, right? Like, when Apple controls that much of the portfolio of these major ETFs, then from an investor perspective, fund managers won't let it go down, right? If it goes down to like 175 and everyone has hundreds of billions of dollars of Apple, they just buy it at 175 and it goes back up to 180, right? Like it would be very hard to see Apple at 180 reaching 3 trillion go down to 140 and then go back to 2 trillion, because all these people that have bought in and invested in the company, they think of it as cash, right? And if you think of it as cash and you think of it as kind of like a savings account, when times are bad, when things are rough, maybe you don't sell Apple. Maybe you keep your money in Apple and you sell all your other stuff and just put it back into Apple, because Apple's that one reliable thing that is never going to go away. And because it's never going to go away, because there's no alternative, because no one else is going to use anything that's different, and because the majority of the funds in the broader global competitive markets hold Apple as cash, that there is such a stable foundation underneath it that it's going to be very difficult to crash the Apple stock. There might be market variables like COVID and the pandemic and stuff that can play a role, but in terms of a general sell-off for Apple, I kind of don't see that happening. Unless, inflation gets ridiculous or supply chain problems, and then Apple, the company itself, starts struggling. That's a different question. But if Apple continues to grow at the rate they're going and continue doing what they're doing, given the perceptions of market valuations and the lack of alternatives, and the fact that Apple makes up a majority of the market, I don't see Apple crashing. That's very hard for me to imagine, because Apple is the market and the market is Apple. Even when old tech growth stocks were declining back in November, 50-40%, Apple was rallying, and you're like, what the heck is going on? And you realize, all these fund managers put their money into Apple. They sell everything else. They put it because they think of Apple in this like golden way. And I understand that. So at that point, the $3 trillion valuation is not overvalued, because if a market valuation is just a perception of what everyone believes about your company, and a lot of people believe in Apple, then it deserves to be valued in that way, because people are going to keep justifying paying the higher price for Apple, especially if they believe in the long-term potential of the car, their ability to get into augmented and VR reality. And we didn't even talk about that today, but that could be a big play for them. And the fundamentals of the fact that the iPhone, Mac, iPad, Apple Watch, AirPods, these things, there's just very little alternatives for them. So those are my thoughts. Are you an Apple shareholder? Do you like Apple stock? Are you thinking of buying Apple stock? What do you think about Apple stock in general in the future and its growth potential? My name is Amit. Looking forward to reading the comments. I'll see you in the next one.